All right. So this particular pattern right here, right, where there's an impulsive move in the market, a correction, right, and a continuation up, right? You see this whether you're on a daily time frame, whether you're on a 4 hour time frame, a 1 hour time frame, a 15 minute, a 5 minute, a 1 minute, it doesn't matter. You will see this same pattern on every single time frame. Okay. It is the same thing. All that happens, guys, is that you get more details every time. Okay. So if we are on a 4 hour time frame, it looks like this. Okay. Then, for example, all right, so let me just help you. All right. Then, for example, on, all right, we're going to stretch it out a bit. All right. So we got more room. Then, for example, right, within this 4 hour, right, you may see like or within this daily, you may see the 4 hour looking like this, right? Same pattern, right? But always remember that market structure is always structure within structure. Okay? It's always structure within structure. So then you may see on the 4 hour, it may look like this. Okay. Right. Then on the 1 hour, right? Then on the 1 hour time frame, you may see this, right? The same pattern, but remember, just more details. Okay? Just more details, more details. Okay? So you guys, I just want you to get the point. You guys get the point? All right, it's the same thing. Trading is the same thing. It's just you're either looking at it on a bigger time frame or on a smaller time frame, right? No, let's take this example, make it practical. Let's put it on the chart, right? Let me just show you what I'm saying. I want you guys to, no matter the level that you're at, I want you to understand this, right? Because sometimes we think we understand it and we really don't, right? We really don't. So, for example, here, okay, here on a daily perspective, okay, on a daily perspective, you're seeing this. All right, let's take it all the way up here. See now that's the high point. All right, this and here. Let me see it pull back here again. Okay, so this is what we see. Okay, same pattern, just not as pretty, not as nice, but the same thing. Okay, you can take this further back. Here, you'll see same thing. All right, price pushed up, pull back down, up again, back down. Right, then we go up again, back down, and so on and so forth. Okay. If we drop the time frame to the 4 hour time frame, then what do we see? We see the same things, right? Remember, just you're going to see a bit more of it. Okay. So same thing happening. Yeah. Just a bit more. So you're seeing price push down, pulls back up, price push down. All right. We're seeing, all right, watch how we came back down. Yeah, watch how we came back down. First push down, get back up, push down, get back down again. And then as we go up, then the same thing occurs. All right. If we go to the 1 hour time frame, look, you see the same thing once again. All right. So the whole point of this, right, if you haven't caught it as yet, is that the same thing that you can do on a bigger time frame is the same thing you will do on a smaller time frame. Okay. So, whether or not you're trading, for example, on a 4 hour perspective or 1 hour perspective or 15-minute perspective, you're going to see all of the same thing basically occurring, right? So what does that say to me? It says to me when I go to actually enter the market that I can actually utilize the same things, right? I can actually utilize the same things, right? Because it's just the way that the market moves. So when you hear me say, okay, well, this is the way that the market moves, literally, this is the way that the market moves. It moves with impulses, corrections, and continuations. Okay. That's how the market goes. You just see more of it based on the time frame that you're on. So 1 hour, if you come down to the 15-minute, right? If we come down to the 15-minute, we see all of what I just showed you guys, right? On these same time frames. It's just more. We just see more of it happening here. All right. Everybody following? Let me know. All right. Whether you're a beginner, whether you're advanced, it don't matter. All right. Just let me know. Yeah, that makes sense. I'm following. I see what you're saying. All right. It happens over and over and over again. Okay. So whether you are daily 4 hour, 1 hour, etc., right? We see that particular pattern, right? Which is this: price pushes up, pulls back down, continues higher, right? Or price pushes down, pulls back up, continues lower, all right? That's what we will see every time. Okay, good. So everybody says yes. The following makes sense. All right, cool. So let's keep it pushing. No, with that in mind, all right. With that in mind, there's two main things that we want to pay attention to. Okay. Whether once again, daily, 4 hour, 1 hour, 15 minute, it doesn't matter. Price moves based on two things: supply and demand. Right? Price moves based on supply and demand. Yeah. The market increases, like the actual price goes up, right? Based on demand, market comes down based on supply and so forth. Okay, everybody got that? Those two things, right? You can be guaranteed, is what is going to move the markets. Okay, there's one more, but sticking to it for now. We're taking this in stages. Yeah, we're taking this in stages. One sec. Oh my goodness. What is happening, man? All right. All right. So your market is going to move. All right. Your market is going to move based on two things. Yeah. So supply, always remember this. Supply is where the sellers are at in the market. Demand is where the buyers are at in the market. All right. So we're going to use this example. Let's utilize from, see if this is white. All right. Yep. Let's go from, let's use the 4 hour perspective, okay? So at highs, right? So when we see prices at a high point, right, the market comes back down because of a supply area, all right? So up here is where that supply zone is at, and then the market comes back up based on a demand zone. So demand is where the buyers are, supply is where the sellers are, okay? So immediately that sparks in my mind, okay, if demand is where the buyers are at, all right, and supply is where the sellers are at, then I need to know where the supply zones are and where the demand zones are, right? So that I don't sell where the buyers are and I don't buy where the sellers are. Is everybody following? All right. Is everybody following? You want to buy where the buyers are, right? Because of course, that's what causes the market to go up, right? And you want to sell where the sellers are, because of course, that's what causes the market to go down, right? We don't want to be on the flip side where we are trying to buy where the sellers are and we're trying to sell where the buyers are, okay? So very simple concepts. I know you're probably saying, well, okay, yeah, that makes sense. I know that, right? Good. I want you to know that, all right? I want you to not forget that either, all right? So with this in mind as well, right? You understand, okay, this is where demand is at, this is where supply is at, okay? Then whenever you look at the markets, all right, you want to identify, okay, where, like I said, where is my demand and where is my supply, okay? So few things we look at for that. You want to look at where do we have aggressive sells in the market? Where do we have aggressive buys in the market? Okay. Where does the market push down sharp? Where does the market push up, sorry, sharply? Okay. So we look at these areas here. So we see market pushes up sharp, market pushes down sharp, right? See those areas? All right, we're gonna zoom in. All right, we're gonna zoom in. So here we got aggressive sells down, aggressive sells down, aggressive sells down, right? We got aggressive buys up, right? Aggressive buys up. So we know, okay, well, cool. These areas where we got aggressive buys up, these are where buyers are at. Buyers here, right? Where we got aggressive sells down, this is where sellers are at, all right? Sellers are at, sellers are at, sellers are at, all right? So you want to sell, of course, where the sellers are. You want to buy where the buyers are. All right, cool. So always remember that. Very simple concept, but very important concept. All right. No, that's one thing, all right, that will help us stay on the right side of the market. All right. Knowing where your supply is and knowing where your demand is. Now, we're gonna get a little bit deeper into it. Okay. Before we go there, all right, there's also another thing that you want to take into consideration. Basically, when knowing, where your if to rather, if to buy and if to sell. Okay, because there may be points where we may have aggressive buys, right? But yet still the market goes ahead and sells. Classic example here, right? Let me use, all right, let's use here, all right? So for example, where we had price, come at this point, right? Yes, we did have for a short moment price push back up, right? But eventually we basically got the market drop down, right? So there's some points where, yes, we have aggressive buys, right? Here, but the market still comes down and sells when price gets into those areas. Why is that? Anybody? Tell me before I tell you. Why is that? Why is that? Why are there some times where price, despite we may be in a demand zone like this, the market may do like this and trade right through a demand zone? Anybody? What do you think? Why do you think? Now, so okay, so let me do it like this, right? Price comes through like this and continues to do like this. All right, let's take it further. What do you guys think like this would happen? Now, this is where trading, when you know too much, you can also confuse yourself, right? Like you guys be going all around the world. Keep it simple. Keep it simple. What is it? Thank you, Brittany. All right. As the end of the trend, right? Like price has changed direction, right? Very simply put, the market has changed direction, all right? As everybody's saying, liquidity grab, etc. Like, guys, listen, all right? Like, and that's deep, right? And that's serious, all right? Like, keep it simple, you know what I mean? And that's the part where sometimes, let me warn you, that as you learn more, all right, like everything is not, let me say everything is not manipulation in the market. It's literally like the basics, right? It's literally price came in to a demand, yeah, and it's just that the market had shift structure. That's it, right? Like structure change, the trend not change, right? So this might have been a demand before, but as we can see, the market did not, for example, go ahead and create any highs. Yeah. So into the next point, all right, into the next point, right, that I was mentioning, you also want to, right, you also want to take note of the trend of the market. Yeah. So yeah, you may know supply zones, demand zones. We also want to take note of the trend, right? We also want to take note of what is actually going on. Is the market doing like this and creating higher highs and higher lows, right? Is the market creating higher highs and higher lows? All right. Is the market starting to shift? All right. as the market starting to shift, right? And we take out lows, yeah, and it shifts from buying to now actually selling, okay? Like what is actually going on in the market, right? Like previous demand zones now become weak, yeah? And then we see price shift to the downside, okay? Like we got to be aware of the actual trend in the market. So in a scenario like this, right? This, and I hope everybody follows still, right? We're gonna break it down, right? When a scenario like this, where what's that, right? Where, for example, this was a demand, right? This might have been a supply, right? Why didn't this hold, right? Why did price hold at this area? Why didn't price come here and push back down, right? Why is it that price just went through? Keep it simple. Why is it that price just went through and traded higher? Let me see. Keep trading simple in your money, always. Keep it simple. Correct. It's continuation of the trend, right? Always remember this, guys, all right? Always remember this. And I know some of you, you're racking your brain right now trying to find an answer. Yeah. Let me help you. Always remember this. Remember the pattern I showed you at the beginning. All right. This way, always when you're in a session with me, always remember that everything that I teach you is connected. All right. Nothing is standalone. Everything is connected. Okay. Because I don't teach you one thing for it to stand alone and then it's like, okay, that's it. No, everything that you go through, you'll be able to join and connect the dots. Okay. So remember, impulse. All right, this is impulsive move. This is your correction. See a correction as is like a pullback for a slingshot. Yeah, it gains momentum in this point. It collects some money. It collects orders in this point, right? Which causes the market to then push higher. Continuation. So impulsive move, correction, continuation. All right, correction, continuation, correction, continuation. All right. Now, at the point where we do not get that continuation, all right, where price does not go ahead and takes highs, all right, market does not go ahead and trade higher, all right, we know this is one of the first indications that we are going to shift in the market. Okay, this is one of the first indications that price may possibly, remember, trading is nothing 100%, right? It's very possible that price could start to shift. Okay, it's very possible that we could then do like this, boom, and trade lower. All right, and then from here, right, because of that shift, then we could actually start now going from an uptrend into a downtrend. So in this scenario here, now we're supposed to get, we were talking about earlier, this was a demand. All right, market, this is the trend. The current trend in the market is up. All right, it's an uptrend. So price came here, pulled back here, right? The possibility that the market could come here and stall is there. But right now, we in an uptrend. Okay, so price came up, burst right through that supply. Okay, so we know that supply zone was, probably a weak zone. So we know here, right? This point here, it was a strong area. All right, so this is a strong demand. Okay, this is a strong demand. All right, all we know this is strong because this area traded past this high. It traded through this high point. Okay, market came back down. All right, this what was a previous supply. All right, was not a strong area. Why is that? Simply because this high here did not push through this low point. Okay, all right, everybody follow? So if this is your low point, this was our strong demand zone here. This pushed up, created a supply zone. It came back down, all right? This demand zone held. So this is a strong demand, all right? It pushed up, broke through this previous high. So definitely this is a strong demand, right? Boom, created this supply up here, right? Which is, remember, this is where the sellers are. Market pushed down, did not break through this area, confirming this is a strong demand as well. Yeah, market pushed up, market pushed up. So this high, we know for sure is a strong demand, right? Creating this high point right here, right? No, here, right? Yes, we were saying, oh, okay, well, cool. This area right here, right, is a strong demand zone. Okay, it's a strong demand zone right here. All right, before I continue, everybody following me so far? Let me know if you're making sense. Yeah? What's up, Kurt? Let me know if everybody following. Let me know in the chat. You're good. Everybody following. Great. Now watch this. Now, we got to this point right here, all right? We got to this point right here. This right here, no, all right? This did not push past, all right? So watch this. This here was a supply as well, all right? Now, price came down. It did not push past this low right here. All right, that's number one. It didn't even come down low as yet, for us to say anything. But price came here, pushed back up, did not break this high. So what am I saying at this point? I'm saying, all right, cool. Price came back up here. So this may probably be a strong supply zone now. Because we didn't just trade through it. Okay, we didn't just trade through it. How we just traded through this point and how we traded through this point. All right, price didn't just go through. Price didn't just go through. Right. So now we're paying attention to this. You say, okay, all right, see this? This is a strong supply. All right, or potentially a strong supply. All right. Now let me see again. Price comes down. Boom. It doesn't break this low though. Right. So be taking note. All right, because it's at this point where we are neither creating higher highs or higher lows, right, or lower lows, right? What do we consider this to be, guys? When the market is not creating highs or higher highs or lower lows or lower highs and lower lows, what is it said to be when the direction is not clear? All right. When the direction is not clear, perfect. Have said it, it's consolidation, right? When the market is just going sideways at this point, it's like it's not creating higher highs, not getting clean, nice movements like this. All right. We know uptrend is when the market is creating higher highs, all right? Boom, and when the market is creating higher lows. And we get to a point where, right, the market is not creating those higher highs and higher lows anymore, then we know we are going into some type of consolidation. When the market is not creating lower lows and lower highs anymore, we know we are in consolidation, right? So it's not clear, right? We have a higher low here, but then we don't have a higher high, right? The market didn't go up here and create a higher point, right? It came back to this point here. So we back at this same height, all right, that was creating a supply. And then we don't even go here and create a lower low at this point. All right. We don't even create a lower low at this point. So the market is consolidating here. Yeah. But what we do know is that you see this area right here? See this area here that we marked out? This area is pretty strong. Yeah. Because if it's one thing that's not happening, price is not breaking through that area. Okay. Price is not breaking through that area. So saying all this to say, guys, right, that although we may know where demand zones, supply zones are at, right, what is very important that we understand is also, right, where we may have strong areas of demand, right, or what we would call strong lows, yeah, and also where we may have strong highs, right, which would be strong areas of supply. Okay. All right. So it's very important that we understand those things that we can be able to tell, okay, well, this is a strong area or this is a weak area. All right. And another way that we could also put this is when we could also see like the trend continuing, which would be us seeing those breaks of structure. Okay, so when we see that trend continuation, right, which is basically when we see that BOS, right? BOS stands for break of structure. Okay, those are our trend continuations. Yeah, when we see price goes ahead, when we see price go ahead and breaks higher highs or breaks lower lows. So this right here, boom, when price breaks this high, this right here, when price breaks, is a break of structure. When price is coming down, goes back and then goes lower and breaks this low, this is your break of structure, right? This is what helps you able to identify those strong lows or those strong highs or those strong demands, right? And strong supplies. Am I clear? Are we making sense? Putting it together. You're making sense? Okay, good. All right. Now remember, like I mentioned, right? Also, like just to note, especially in this scenario, if price is also not breaking a particular area, then more likely that area is pretty strong as well. All right, just note. All right, price is not breaking a particular area, then the area is probably pretty strong. Okay, so then we see in this scenario how price eventually now starts to take out lows. Right, so we see here now market pushes from this supply, boom, takes out this low. Right, boom, takes out this low. Okay, then we come back up. Guess what? We trade lower again. Okay. So now we got some type of pattern basically taking place here. So we know, all right, hope price takes out a low. This was demand, previous demand as well. Market come back, push lower again. Yeah. Trades into no into a previous strong demand zone, right? Very possible that we may get a reaction, okay? We may get a reaction in that area and a temporary buy, market pushes up, right? Temporary buy, that's very possible, okay? But it doesn't hold, right? Because no, somebody tell me why it doesn't hold. It's simple, all right? Why it doesn't hold? Why doesn't it hold? Downtrend, right? Perfect, June. So basically, right, the market, right, doesn't hold, right? Price doesn't hold here, right? At this demand zone simply because we are starting a downtrend. That's it, right? We are starting a downtrend. Very simple. So price goes ahead, breaks this low point, boom, pushes down, right? And we know we can confirm the downtrend at this point. So we got our lows being created, right? We got a strong supply here as well. Price took this low. Boom, we got a strong supply. We just shift, right? We just shift from a uptrend, boom, to a downtrend. Fine. All right, very simple. Okay, so that's basically why price could come and break through strong demand zones, yeah, or previous demand zones, right? Simply because we got that shift in structure, right? Makes sense. Everything making sense? You got that shipping structure. All right. So, you know, we gotta go with what the market is giving us. We can't fight it. All right. We don't necessarily know when it's going to shift. We just gotta pay attention to the signs, which is price breaking lows or price breaking highs. Okay. Those are the signs, right? When price gives you that break of structure. Everybody following me? All right, everybody following me? You see, you good. Perfect. All right, stop. All right, so I'm about to move this. Everybody good on it? I can move this. Hope you guys taking notes. I hope you guys taking notes. Okay, good. I'll be moving through nice. All right, moving through very nicely. All right, cool. And this is all basic market structure. I know some of you got some aha moments. while it was going through, right? And you were saying at the beginning, Kelly, man, you see this already. Anybody, anybody was thinking like that, or like anybody was like saying that at first, like they see this already, bro. Like show me something else that I ain't see. Don't like, don't tell the truth. Shame the devil. Nobody was like, that's the truth. Don't lie. Some of y'all was probably like, bruh. I know some of y'all was like, bruh, I see this already. Right? So I don't know why you're going through this again. Show me something else. Let me go off this call. Maybe watching TV or like you're watching a series or something. You got me on this call for 7 o'clock, 7:49. All right, you're showing me supply and demand. Sam, that was you, Sam. It's like my boy showing me supply and demand. Yes, supply and demand, bro. And impulse continuation, retracement. Like, wow, Kai, I have seen that so many times. All right, anyway, let's go, Kai. All right, let's go. So let us where we are. All right, cool. So what we're gonna do is now, right? How are you identifying these supplier demand zones, right? Here's what I'll say. I'm gonna keep it simple for you. Use it 4 hour time frame. Yeah. Use that 4 hour time frame. You'll be able to identify those areas of supply and demand. Now, what we're gonna do is we are looking for engulfing candles, right? You guys know I love an engulfing candle, right? Engulfing candles, beautiful, perfect for a number of things, right? So let's talk about it. Engulfing candles, right? So, for example, this is an engulfing candle, right? How do we know? We know it's an engulfing candle because we got a large body, okay? A large body engulfing a large bullish body engulfing a small bearish candle. Yeah. Boom. Like easiest one, the easiest candles to spot. So for example, this, boom. See that right candle right here? All right. See that right candle? Looks like this, right? And this, boom, big body. All right. This looks like that. This small candle. Make sense? This looks like that. This big candle. Make sense? Everybody follow? Anybody didn't know before? Right? You don't know. So flip, so that's a bullish engulfing candle, bearish engulfing candle, right? Now it is big body cells, okay, big body cells, which is this candle right here, small body buys, which is the previous candle, right? So this, which is this, which is this, or this, which is that, and then this, which is this. All right, everybody follow? Everybody should be professionals now on what engulfing candle is. Yeah, you should be a pro. All right, okay, good, perfect. Now, it could also look like this. All right, so let's help you out. It could also look like this. All right, where you may see small bearish candle, maybe with some wicks. Yeah, small bearish candle, maybe with some wicks, right? And next candle, boom, big bullish, sorry, big bearish candle. So for example, um, this right here, boom, that candle, then this candle right here, bang, right? Bearish engulfing candle, yeah? So it could also look like that as well, okay? So, so on the flip side, you guys know, same thing, okay? So with that understanding, you understand what is an engulfing candle, all right? You may also see like three bearish candles in one direction, right? You may also see three bullish candles in one direction, right? Also engulfing candle, okay? So what we're gonna do to identify those zones, right? We want to identify the bullish and the bearish, sorry, the supply and the demand zone. Okay, we want to identify the supply and the demand zone. What are we gonna do? We are literally taking the opening and the close of the candle that got engulfed, guys. All right, the opening and the close, opening of the sell candle. Remember, the sell candle goes down. So the opening and the close of the sell candle. Okay. So we use a rectangle like this to mark out the area. Boom. That is our demand zone. Okay. So for example, this opening, close, put across, that's our demand zone. Okay. So supply on the opposite end. All right. On the opposite end, we want open and close of the bearish candle, of the bullish candle, sorry. So this candle here, opening, close, boom, mark it out. All right. This is our supply zone. So for example, like this, all right. When you see wicks like this, take all the wicks into consideration. Okay. If you got wicks, take the wicks into consideration. Boom. Supply zone, boom, demand zone. Okay. Boom, supply zone. Okay. Everybody follow? Simple, clear. Everybody got that? All right, you're gonna be a big trader, but tell me you got fun tonight. All right, good. So that's yours for our supply and for our demand. Okay. So remember, like I said, you see the same thing on a 4 hour, on a 1 hour, on a 15-minute time frame. Okay. You just gotta identify it. Okay. The lower the time frame you go, the more precise you're getting. All right. It's about precision. So you want to be able to increase your risk versus your reward. That's why you enter trades on lower time frames. Okay. And it's one thing, to be able to enter a trade like this, right? Where it's like you see this demand zone and you say, okay, well, let me just example. All right, if you trade just from this, with a stop loss just below, and you are targeting like right here. Okay, like you see this, and you're targeting right here, right? This becomes not a favorable trade. This is what you call a waste of time. All right, because the risk that you're taking is basically equal to your reward. Furthermore, is less than your reward. All right, that you're never going to trade where you risk $100. All right, in this scenario, you risk $96 to gain 80, for example. That don't make sense. All right, you risk $96 to gain 80. So that's why you don't want to take trades on the higher time frame like this, right? Because like I said, it just don't make sense. Right? You want to increase your risk to reward ratio by simply lowering the time frames that you actually enter your trade on. All right. So rule of thumb. If you analyze the trade on a 4 hour time frame, look to enter two time frames down. Those two time frames you count as 1 hour, 15 minute. So if you analyze on the 4 hour, you're looking at 1 hour, 15 minute. That's two. Okay, so 1 hour and your 15 minute is your entry time frame. All right, everybody got that? If you're analyzing on a 4 hour, you're looking to enter on a 15 minute. Two time frames down. Okay, two time frames down. If you're on an hour, then you're looking to enter on a 5 minute. All right, so hour, two time frames down is 15, and then a 5 minute. Okay, if you are on the daily, then 4 hour, two time frames down will put you on the 1 hour time frame. Okay. Obviously, you could start from 4 hour time frame, 1 hour, 15 minute. All right. So I'll show you, for example, how you could get uh, like better entries and so forth in the market. Already just made sense, right? But we're gonna get there. So simply, like I mentioned, same thing that you see on the 4 hour time frame, you'll see on the smaller time frames. So let's go down 1 hour. We're looking for the same thing, right? Basically, we're looking for the same thing. And here's the thing though, if you can't see it, if it's not clear, go to the time frame that it is clear. Okay? Like, don't try to trade what you can't see. Like, don't try to trade what it is you can't see. That's like, for me, I don't force it. If it ain't there, it ain't there. All right? I don't try to make up stuff because it ain't there. I can't see it. All right? I'm trading what I can see. Okay? So if I'm on a 4 hour time frame, I am looking for an engulfing candle and I do not see one. Guess what? We go to the next time frame. All right? So 1 hour, going to the 50 minute. All right? Because I know what it is I'm looking for. If I do not see it, I do not trade it. Okay. So here, right? Remember I said as well, engulfing candles could look like also 3 consecutive buy candles. So for example, in this scenario, we got right a number of consecutive buy candles. So we could take this as engulfings. Okay, so that's fine. All right, it's absolutely fine. Okay. Now, so this, may be clear. All right. You can see this as being clear. This is engulfing. Okay. Market completely took out this entire sell move down. All right. That we completely took that out here with this. Okay. I won't really consider this to be engulfing. All right. So nonetheless, this area, for example, is where we will be looking at. Okay. So let's go to, so just showing you 4 hour. Right? So we're looking at supplies. So for example, here, this was your engulfing to the let's start here. This is your engulfing to the downside. When you do 1 hour, right? You're looking for the same thing, right? I always remember like it ain't gonna be as pretty. Okay. This we got 3 candles, 1, 2, 3, right? This 3 candle push down. All right. I would say though, I would go to another time frame down, 15 minutes, to see if we can see something a little cleaner, right? Because we got a lot of wicks and stuff here. All right. So let's drop the time frame. You want, like I said, as clean as possible. All right. So we see what it actually was. And this is what is important, to take a look. All right, because we see what it actually was. On a 15 minute, it was a nice engulfing candle to the downside. Yeah. Nice engulfing candle. You see the candle here got engulfed. All right. So you guys following like what is important to go down the time frames because 1 hour that just looked like a big wick down. You know what I mean? 15 minute was actually an engulfing candle. All right. Closed with a wick at the bottom. Nonetheless, it was engulfing here. All right. Everybody follow? Right. Then we have like another engulfing candle right here as well. Yeah. Let me know if you guys following. All right. This is what is important. Flip through the chart. Like go through the charts to see, okay, what is that actually happening here? Small time frame, 15 minute, it was actually engulfing 1 hour time frame, it just looked like a wick. Let me see what's actually going on, So go through the time frames, look at the candles, right? It's literally reading data, for lack of a better term, right? So you want to go through the time frames and see what is actually happening. Okay. So, all right, let's back to 4 hour. Just taking a look at these others. So this candle right here, engulfing candle, 1 hour. What does that look like? All right. Nice. Okay. So we got same 3 candles. Boom. Nice push down. All right. Engulfing candle, 15 minute. What did that look like? All right. So we got a number of engulfing candles within that same area. Okay. Okay. So we got like a number of engulfing candles. Engulfing candle here, engulfing here, engulfing here. Okay. Everybody following? We good? We clear, see what's going on. It's the same thing. Okay, it is the same thing. If we come here to this one, we had that big engulfing candle right here. On the 1 hour, boom, engulfing candle. On the 15-minute, boom, engulfing candle right here, engulfing candles here. All right, price push down. Okay, so everybody good? Good. All right. Now let's bring it together. All right. Let's bring it all together. All right. So let's say, for example, what is happening? This is me. All right. All right. Let's see what's happening here. Oh, who are you? All right. All right. Cool. So let's say, for example, we decided, all right, we're gonna go, what? Last say really when the president, what is that? Anyway, let's say we decided we're gonna go back here. All right. So we're going back in time. All right. Now we're taking a look at the chart. All right. Let's start on the 4 hour time frame. We look here, right? And we could see basically price comes up to this point, right? And we just tap in that same point over and over and over and over again. All right. So let's look more present. Okay. So for our time frame, we're taking, right? So key things to note. Remember we mentioned, right? Remember we mentioned first you take into consideration the structure. Okay. So we could see, yeah, prices, more price has been creating higher highs and the market has been creating higher lows. Okay. So boom, right? We got that. So we were in an uptrend here and then like we kind of stopped, right? And the market kind of came to a halt, right? Where we didn't create any higher highs in the market. Okay, price came, created a equal high, right? We didn't create a lower low. So we basically went into some consolidation for a little bit. Okay, so what are we doing? At this point, we could also identify, right? On the 4 hour, we can also identify that this is a supply zone. Okay, so we take this. So, all right, cool. This is our area of supply. Remember how you mark out your supply. All right. Remember how you mark out your supply right here. Okay. So we know that price comes up in that area, pushes back down, didn't create any lower low, right? But we come back up in that area again. All right. So what we do, same thing. All right. You could, my perspective, what I would do with this is I would be looking for sells again, all right? Because we basically in consolidation, all right? So we're looking for cells within this supply. All right, we're looking for cells within this supply zone. Okay. Now let's drop to the hour. All right, let's drop to the hour. And basically, like you are doing the same thing again, all right? So price comes up within this area, right? What you're looking for is so let me just put it like this, an engulfing candle you could also utilize as an area of entry, right? Like those supply and demand zones. You want to sell in supply zones, you want to buy in demand zones, right? So the main thing for you is that you want to identify those areas, okay? So for example, this 4 hour perspective, our demand zone would have been here, all right? Our demand zone would have been here. So you see how price pushed up here, boom, right back into the demand. and then pushed higher. All right. This right here, this big engulfing here, this would be a demand also. All right. Now, I want you to see potentially what should happen here. All right, the price should trade through this. All right. This should not hold basically, all right, based on what is going on here. Yeah, we should see price drop right away through and maybe back down to this area where we had the actual push from. Okay, so what we're looking for is engulfing candles, etc. For areas of entry. So we look at this, so we know our demand is back down here, right? We also know we had a demand zone back in this area, right? Where price pushed from. Okay. So we see how price held, it's holding basically at this area. All right. So we're just utilizing these same concepts, all right? Nothing fancy, nothing changed. Okay. Market hasn't broken, any highs. Market hasn't broken any lows. So when we go on the smaller time frames, what do we want to do? We want to look for those same things, right? So we're looking at highs, we're looking at lows, yeah. We're looking for any breaks of anything, right? That's literally what we're gonna be looking for. Okay. So, price didn't break anything at this point. All right. So at worst case, we should at least expect price to come back down within this area. Okay. All right. So for our time frame, right? If we came here, we saw this, we could see, right? Yeah, this was a supply. All right. So we got that engulfing. This was a supply as well. All right. And we could come all the way down. So now what you want to see is you want to get clear on this point, all right? You want to see price start to break something, all right? You want to see some type of structure being broken, guys, all right? Like, yeah, market is in that area, but we want to see the market start to break some type of structure, okay? We don't want to just jump in the market just for jumping in the market. Say something needs to give us an indication that we should actually go ahead and sell, okay? So what that will look like, for example, is if this is market trading up, bottom, and then market trades higher, right? And then consolidates here for a bit, which would be then our pullback, and then it trades higher, right? And then pushes here. Like we should see price we're at some type of low, right? Like this is on the hour, so all right, we should see price break some type of low being formed before we decide, yeah, we're gonna tackle the market. Okay. So example, all right, let's see. All right, perfect. So in this scenario, we have price went ahead, created another high here, right? We created another high, so then this now becomes our low, and then we got the first break, boom. Now, so now we in this demand, yes, but we also got a break right here, all right, giving us the first indication that price should push down. Everybody following? All right, let me know. Everybody following? Let me know. Let me see. So we got the first break here. All right. Let me know. Let me see. All right, waiting for you guys. Everybody following? Okay, good. All right, cool. Now, if we on a 4 hour, right? Let's say we have a step back to the 4 hour time frame. Boom. What is this? Engulfing candle, correct? Engulfing candle. Is it? Am I delusional? Talk to me. Is this engulfing candle right here? Okay, good. So we got an engulfing candle. All right, cool. So let's say we took this from the 4 hour. We identify this right here, buying as the engulfing candle now we want to see. All right. Boom. So we got the engulfing candle and we got that break. All right. So this is what's giving us our bias, all right, for like sells and so forth in the market. All right. So we got price pushing down. Bang. All right. Now, what we want to see is So we go to the 1 hour time frame, do the same thing, all right? Do the same thing. So we identify the engulfing candle, 1 hour time frame. Remember I said the lower the time frame, basically is just getting more precise. Oops. All right, just getting more precise. Okay. So I'm just gonna take this and we are going to go with that candle right here. All right. And in this scenario, we are going to use this entire weight that was left behind as well. Okay. So we have here the opening of this candle. We're going to include this weight because, all that happened in that move, right? So this becomes an area of entry. Okay. This becomes an area of entry that I will be looking to sell price down. Right? This is the first break. I'll be looking to sell price down from up here. So what we'll be looking for, so once again, 1 hour, 1 hour supply. What we'll be looking for is for price to trade back up into this and then take a further push down. Okay. Now, when you're using these supply zones, right, we will get into more depth at another time. But when you're utilizing these supply zones or the demand zones, you got two places that you could actually take your entries from. Okay. So you could actually go on the opening or 50% of the actual area. Okay. The opening or 50% of the actual area. Okay. So this is, remember, it's a zone, right? So 50% of the actual zone or the opening of this of the zone. Let me just say. Okay. So if you have to step to a 15-minute time frame, right, which is where we're actually looking for the entries. If you have to step to a 15-minute time frame, right, we could, like I said, you could take your entry from the opening to 50%, right? This is about half. Yeah, it's about half. Yeah. So it's from here to here, that's about half. All right. So let's see, here's about half of that zone, right? So this is the area that we're looking at. So you could either literally the entries from here, put your stop just above, all right, like a few pips above the area, okay? Or you could run the entry from here, same thing, all right, probably like a few pips above, and target bot down here, all right? Or like I mentioned, even lower, right? Bot down in that area, yeah? This could be your first area here. And you know that if you break this area here, or this demand, or this previous demand, you know that you're going down, okay? You know that you're going back down to this other area that we would have marked out from that folder. All right. We would have marked out from earlier. Okay. Everybody following? Everybody following? Let's see, before we go, let's see if this pans out the way that we expect. All right, okay, cool. All right, so what we're looking for, remember, 15-minute. All right, we're looking at price to trade into that area. See how we go. All right. All right. So then next session, we will talk about things like balance. We will talk about things like fair value gaps, etc. Right? And so on and so forth. Okay. So let's see. All right, cool. So we got one, boom. So if that would have been, this could have been the entry, or like I mentioned here, could be your entry as well, right? 50%, went just past a bit, all right? And then once again, whoops, we got confirmations that we could literally, if you want to, you could run another cell, right? So once again, we had, what's this here? So market, remember, same thing starting to push up. All right, starting to get these um, this little push up, boom. All right, market's giving us these smaller pullbacks and so forth. So this would be like an entry, maybe like on like a 5 minute time frame, right? Which would basically be the same thing. All right, I'll show you guys what I mean. All right, a price then comes and takes out these lows. All right, but same thing. So we're looking at this, let's say on that time frame. All right, I got it here. All right, just showing you same thing all across the board. It's the same thing. Okay, then you got price comes up, works pushes down, takes the low. What do we have here? What is this, guys? You could recap that last part. I think I'm doing it here again, right? Because I don't know when you sent that message. So I don't know how far I'll go back. All right, but let me know what do we have here, guys? What is this? Engulfing candle. Okay, cool. Engulfing candle, great, right? So what we do, we mark it out again. All right, we're gonna take the wick in consideration again. All right, take the wick into consideration again. And remember, you got two entry points. You could take the opening or 50%. I think that might be 50%. Right? And we could do, if you want to be more accurate with the 50%, sometimes they use a yeah box. All right, this box right here. And literally, I think I maybe edited a bit, but I took out the other numbers. I just have 50% left in it. Let me see if I did. Yeah, I did. So I edited it. So still, I just removed 38, 0.382, 0.618, 75%, 25%, just left it 50%. All right, kind of like a fib, all right, but just left it 50%. And I use that as my 50% box, basically. All right. I don't really use it now because they like average and estimate 50% a lot easier now. All right. But you can use that if you want to be more precise. You see, it's basically the same area, same place. All right. So we know, okay, this basically where you would be looking at. Okay. So, all right. So what we're going to do, chart. So this was your, if you decided that you were going from the opening, we're going to go a few pips above. Yeah, we should be all right here. Shouldn't, like, price shouldn't trade back above that. I'll be very surprised if it does, to be honest. Or you could go here, all right, 50%, and boom, right around that area. And then we do the same thing, buying, targeting the same point. So you literally could go out like four entries, not four, two entries on this, right? Like I said, we could target this lower, right? So you got more confirmation that price should, emphasis on should go down. All right, we got this first move. This was a good push down. That was like actually a 75 pip trade down. That one move. Yeah, that was decent. Market pull back up. Let's see what happens. All right, and you're good to go. All right. So far, boom, surprise. That one entry are here, 50%. You stop above, so you're good. All right. And price then starts to move away. All right. Once again, you have same things, engulfing candle. All right. And you could go either opening 50%. All right. Let me just put one just for now. Yeah. See what happens. All right. Would miss that one. All right. The person did that entry. But then, right, remember what we're looking for is, wait, tell me what we're looking for. We're looking for price to break this demand here. All right. Price breaks that demand, then we know we should push down lower. Okay. But if you get any market trading into it, once again, we got a nice push down. And right, watch it again. So we got another engulfing candle right here. All right, got another engulfing candle right there. This is on the hour. Go on to 15. All right, same thing. Boom. Entry on the opening or 50% of that area. All right. Boom. You got another entries. All right, just gonna go higher time frame so we can see how this goes. Once again, so that's another entry. All right. And gone again. All right. Let me see how. So you guys see how that played out? All right, literally that's one, two, three, right? Three here, right? Price topping into this point here. I'll be a little bit iffy running this again, but could play out again, right? You know, was a little bit of lower, right? Could play out again, so you got like a nice engulfing off the area right here, right? On a high on the hour, yeah, you could like run that from the same thing again. Boom. All right, you have entry from here. All right, 50% there. All right, run it again. Small or equal weight, you know, you got engulfing calendar right here. Entry on that same point. All right, stop just above. Should be okay there. And go down. All right. See if that one works out. See how it goes. All right, yeah. So we pushed our luck. All right, Bryce ran through that one, you know, and I think we might start to push back up and stuff from here now. Yeah. All right. So everybody following? So you see that's what we're talking about, like the demands and so forth. So we brought this demand, right? But price traded lower into this previous demand. Yeah, as I said, that's when now we got a little bit, shaky and stuff on taking that entry again because we traded into a stronger area here. And then we got the actual push price take out these areas above. All right. We making sense? Everybody follow? All right, the whole point was to show you higher time frame down to the smaller time frame. You could literally look at the same thing. All right. You could literally, take the same thing, same confirmations, and run it over and over again. You get the structure, you get the supplier demand zone, you get that engulfing candle, right? And you could literally take those entries from the opening of the candle to 50% of that candle, run it, right? And so the smaller time frame, 15 minute, good to go. Right, clear? Feel like some of y'all gonna sleep. Y'all, you guys sleeping? Talk, talk to me. All right, clear? Okay, cool. All right, good stuff, good stuff, good stuff. So, guys, tonight I hope that this session was clear. Like I just took you through it, right? Um, remember, once you understand structure, like the breaks and stuff of structure, you understand, like strong highs, strong lows, and like I mentioned, don't try to sell in demands, all right? Try to buy in demands and don't try to buy in supplies, all right? Selling supplies, all right, as much as possible, okay? And you'll be able to, catch moves like that. They literally show you is three trading opportunities. One, two, three. This was the third. And the fourth one was a loss. I mean, shoot, you've been through out of four, that's great. You know what I mean? Right? That's great. So then, like those would be good trade setups and so forth that you could have got and so on in the market. All right. So I think see where at price went from here. Where did the price go? Well, that was all the way by here. All right. So you see how price pushed up, all right, from there. All right, let's go through it. Let's look at it. So then price came up, boom, took the highs. Okay, took these previous highs now, took out the previous supply. All right, we can move to the 4 hour. All right, move to the 4 hour. All right, so now this became your height. All right, so now this became your high. All right, so now this became your supply. 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 All right. This became your higher low. All right. So we're looking at demands, right? And you do the same thing again on the opposite side. So 1 hour time frame, all right? 1 hour time frame, all right? We can see these engulfings here, 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 all right? You can see the engulfing candles. Yeah, we can make it clearer, all right? So got that engulfing, right? Probably would have taken that into more taken a look at this one, seeing that price traded into here, all right? But this entire area, we take it and we drop again to the 15 minute. Where are we? Okay, here we are. 15-minute candle. What we're looking for, we are looking for the engulfing, right? So here, for example, right, right is where, let's see if we can reach, whoops, don't move, don't move. All right, fine. All right, into that area, and then we get the push up. All right, so now you know that, for example, it would have been literally 50% opening that candle, being here, right here, and we put our stop a little bit below. All right, and you got to move. Well, hope this helped. Hope this was clear. Hope you guys could go ahead and put some of it into practice. Yeah, and yeah, make use. All right. So I hope this guys was clear for everybody. This session exact 8:30. All right, exact 8:30. Um, like I said, no matter the level that you guys are at, you should have been able to understand that. Yeah. Was this clear? Anybody feel like they got some like one moment score? Anybody? 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 Yeah. Good stuff. Somewhat clear. Got to watch it again. Yeah. Definitely gotta go for good stuff, good stuff, good stuff. All righty, guys. Glad to hear you guys got value, right? So with that being said, right, let's go put um, all the information you guys would have received tonight into practice, right? You guys should know what you're looking for. Look for their supply, look for those demand zones, right? You know, you put it into practice. It's all practice now at this point, right? Nothing is gonna come from just seeing it once. You gotta literally know, go on, play it to your chart and see if you are actually seeing, right, what it is that I'm saying. Okay. So put it into practice, right? And that's again, like I said, that's gonna be gonna know. Yeah. Practice, 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 practice. Also like I said, play for trading view, use the replay tool is going to help significantly. So with that being said, guys, do have a good one. All right. Still looking and waiting for buys and stuff on gold, right? To be honest. So you guys know. Um, just need something solid and simple. All right, just need something solid and simple, for us to take some buys because I think the next move gonna be a nice big move up. All right, a nice move up to 44 or higher, actually. All right, 40, actually that 45 that 4,500 area person's got gold projected to go to 5,000 by the end of the year, etc. Right? So all this, still, unless gold goes ahead and breaks this area, then we will get bearish on gold. All right. But than that, looking at buy still on gold. All right. So it's like this push. to this height, all this was the up move at that point, right? And we back down into this demand, right? All this here, back down into this area. So I'm just looking for a buy that makes sense to take market higher. Okay. So hey guys, so go for just being very, very, very patient, waiting for something very, very solid. Okay. So have a good one. Have a good night. Be blessed. Let me see you all. It actually looks like it's starting to rile up right now, to be honest. All right. But like I said, with gold, do the same thing that I just shared with you. Wait for the break, get it pull back, run it. All right. If you get the break, get it pull back, know what to do. All right. Have a good one. Have a good night. Be blessed. See you guys. Peace.